given we're in that seasonal period from October to year end, and we think the S&P can get to at least 7,000. It has been, and we've seen it this week. These pullbacks get bought, so we could be weak today, and I think we could rally tomorrow. And in general, I'd still be bullish into year end.
Hey everyone! So Tom Lee just dropped some serious insights on CNBC, and honestly, we need to pay attention to what he's saying. This could change how you think about the markets entirely. Market reality check. Here's the thing. Most retail investors have no idea what's coming next. And I'm not trying to scare you, but we really need to understand what's happening in these markets right now. You know how crypto works, right? Whatever stocks do, whatever commodities do, crypto does it bigger and faster. That's literally crypto's biggest selling point. The speed, the massive moves. It's incredible when things go up. But here's what people forget. That same volatility hits just as hard on the way down. And Friday, that sell-off we saw was absolutely historic. One of the biggest crypto liquidations we've ever witnessed. Current market snapshot. So where are we right now? Well, we're probably going to see some more choppy price action before things fully recover. And the numbers tell the whole story. Bitcoin's sitting around $111,000. Ethereum is still struggling below $4,000. XRP is hanging out under $2.50. Even in just the last 24 hours, we're seeing red across the board. Take S&X, for example. This DeFi project is down over 20% today alone. Most altcoins, they're bleeding anywhere from 3% to 10% or more. And honestly, this chop fest isn't going anywhere until Bitcoin gets its act together. The leverage trading disaster. But here's what really gets me fired up, and I cannot stress this enough. People are still gambling with leverage. Get this. In just the past 4 hours, over $250 million got liquidated. And get ready for this number, $212.5 million of that was from people betting long. This happened right when Bitcoin hit major resistance. If you've been watching my recent videos, you know exactly what I was talking about. People were literally longing right at the top, just waiting to get completely wiped out.
Bitcoin technical analysis. What I'm watching. So let's talk about what Bitcoin is actually doing right now on the daily chart, because this is where the magic happens. The main thing I'm laser focused on? The RSI. I want to see us keep holding this beautiful uptrend we've been riding since all the way back in September. So far so good on that front. And look at the price action itself. We're still holding that daily uptrend like a champ. We haven't closed below it yet, and honestly, I'm praying we can keep it that way. Now, here are the key levels I'm watching like a hawk. We absolutely need to hold above $113.4 thousand. That's our lifeline right there. But here's where it gets spicy. You see that resistance up at $115.4 thousand? That's exactly what I was warning about. So many traders were setting up long positions around that area, thinking they were being smart. But guess what? That's pure resistance territory, and the market showed no mercy. Boom. Rejection and liquidation city. This is why technical analysis matters, people. We need to clear these key resistance levels and get some real confirmation that we've actually found the bottom. Only then can we start building back toward those highs we saw earlier this month. Huge Fed update coming. This changes everything. Okay, here's where today gets absolutely critical. Fed Chair Powell is speaking in literally 20 minutes from when this video goes live at noon. This could be a game changer for everything. Stocks, crypto, you name it. We're getting updates on economic outlook and monetary policy, and everyone's on edge about potential rate cut decisions. Here's what Powell might say that could move the entire market. Rate cut probability, the numbers don't lie. Listen to this. We currently have a 96.7% chance of a rate cut happening on October 29th. That's just 15 days away. I'm personally betting we get another rate cut, but here's my concern.
Jerome Powell has been using the whole trade war and tariff situation as his excuse to keep rates unchanged. And with all the drama happening between China and the US right now, that gives him the perfect ammunition to say, hey, we're keeping rates the same. So this speech is absolutely crucial. We might get the clarity we've all been waiting for. Market context. Why this matters so much. Here's what everyone's analyzing right now. The economy is still showing strength, with solid third-quarter GDP growth, and unemployment is steady at 4.3%. But we've got these wild cards, potential tariffs, and a labor market that's starting to show some cracks. Both traditional markets and crypto are hanging on every word Powell says. The markets are pricing in a 97% probability for a 25 basis point cut at the October 29th to 30th meeting. I'd personally bet on that 25 basis point cut, but it all depends on one major factor. Will we see any major developments in the China-US situation by the 29th? But here's my honest take. Even if we don't get major news on the trade front, I still think the probability stays super high for a rate cut. Why? Because I think we're following that same playbook from 2024, where we saw 3 back-to-back interest rate cuts to close out the year. So I'm calling it right now. Rate cut on the 29th, and then another one on December 10th. That's my prediction, and I'm sticking to it. S&P 500 analysis, setting up for something big. Now let's talk stocks for a minute, because this is where things get really interesting. The S&P is currently trading around 6,620, and honestly, that's not a massive difference from where we bottomed out. But look at this chart. We've got some serious action happening here. We bottomed out with a few wicks, one going all the way back to September 17th, and then we hit another bottom on Friday.
I've got this on the 4-hour chart, and guys, this could be setting up for a textbook double bottom pattern. But I need to see more confirmation before I get too excited. Here's what I'm watching. We need to break above those recent highs. If we can reclaim 6,657, that's going to be huge for this chart. But honestly, I don't want to get ahead of myself here. The real prize, the level that's going to make me jump out of my seat, is flipping those highs from the end of September. We're talking about 6,696. Let's just call it 6,700 to keep it simple. That's the signal we're all waiting for. That's what's going to tell us we're ready to push much higher and retest the all-time high. Right now, though, I'm not seeing that confidence yet. The S&P needs to do a little more work to convince me we're ready for liftoff. Tom Lee's bold prediction, S&P to 7,000. But here's where it gets wild. Tom Lee believes the S&P can hit at least 7,000 this year. Think about that for a second. We've only got 2 months left in 2025, which means the S&P would need to go on an absolutely insane rally. And if that happens, crypto is going to follow right behind it like a rocket ship. Check this out. Scott Milker posted this on X, and it's exactly what Tom Lee is saying about the markets right now.
It does take us to our talk of the tape, the rally's road ahead. I mentioned that call from Tom Lee. He does join us now. He's a CNBC contributor. It's good to have you back. Welcome.
Great to see you, Scott.
So what do you make of just how the market's trading today? We've had a nice run. It's given a little bit back. Maybe some concerns are out there about the strength of the economy, the labor market, some other stuff. What do you see?
Well, I think markets are trying to balance a few things because we are navigating a little blind because of the government shutdown. But we also know that the real powerful driver of the equity market and the economy has been AI, which is not affected by this slowdown. So I think stocks are in this sort of zigzag pattern, but given we're in that seasonal period from October to year end, and we think the S&P can get to at least 7,000, it has been, and we've seen it this week. These pullbacks get bought, so we could be weak today, and I think we could rally tomorrow. And in general, I'd still be bullish into year end.
Are we whistling past the graveyard, Tom, on anything that could be concerning to you? I see a story right in front of me from Axios mentioning a Moody's analysis. 22 states are in recession or close to it. There was that Carlisle independent survey the other day showing the labor market is much worse than expected. Gold's been going up. Some suggest that's de-risking from the U.S. AI bubble. You mentioned the shutdown. Are we complacent towards any significant risks that we might be missing?
Well, I do think markets are less skeptical than they were in April and even in August and September, and we can see this in both positioning and AAII. So I think it is fair to say that the markets have priced in more good news. So like the things you flagged can be worrisome. But what I'd point out is that I think the AI story is actually strengthening, Scott. From our conversations with both companies and investors, it actually seems like the payback for AI, whether it's applications or services or companies' actual ROI, actually has improved in the last quarter or so. So I think that's what's helping actually create demand for spending. So I think we may be underestimating the sort of profit creation coming from AI. And I think that's why there's still legs to that story. But you're right. On balance, the data is mixed and we don't really know because we don't have government data.
Yeah. You gave our producers this line that you still think it's the, quote, most hated rally. And I've asked you about this every time you've been on with me. I feel like now that's a little bit far-fetched to suggest that this is still the most hated rally. I don't find anybody who comes on, certainly not on the programs that I do, that is overly negative about anything. The prevailing view, even from those who were cautious before, like the stock market's going higher. Now, it may end poorly way down the road, but it's going higher. So how can you suggest that it's still so hated?
Well, there's this thing where people can make like a backhanded compliment. Like they might say something positive about the market, but they're really bearish. Because when I hear people say, oh, well, this reminds me of 1999, or, they're ringing the bell on the top of AI stocks, they are maybe acknowledging that the market is strong, but then they're trying to mark the end of that rally. And I think, for me, who was an analyst in the 90s, people forget that Cisco in September 98 was almost a 60 PE when the Fed made its first cut in 9 months, and then its PE went to 200. NVIDIA is that stock today, and it's trading at around 27 times forward earnings. I mean, it's got a lower PE than Walmart and Costco, which are like 35 to almost 50 times. So I just think a lot of good news has been accepted by markets, but I don't think it's necessarily priced into markets.
And you know what? I completely agree with Tom Lee here. The market psychology right now, everyone's wrong. Here's what's fascinating about this moment. So many people are sitting on the fence right now, completely torn between being bullish or bearish. And in crypto, almost everyone thinks alt season is dead, the market is cooked, we're at the top, and nothing's happening. So what are they doing? They're flipping bearish at exactly the wrong time. I have this gut feeling, and my gut has been pretty good to me over the years, that we're about to witness these markets bounce back harder than anything we've seen in the last 3 years. The next wave will be massive. And here's the kicker. This next rally is going to catch everyone off guard. When this next wave hits, whether it's crypto, stocks, or any other market, it's going to be the largest one yet. Everyone's going to hate missing it, but that's exactly what makes it so powerful. When everyone's bearish, when everyone thinks the party's over, that's typically when the real fireworks begin. Everyone's going to hate missing it, but that's exactly what makes it so powerful. When everyone's bearish, when everyone thinks the party's over, that's typically when the real fireworks begin. The FOMO trap. History always repeats. And here's the brutal truth about what's coming. This next wave will eventually lead to the top. That's just how markets work. But here's the kicker. So many people are going to be sitting on the sidelines right now, only to FOMO in near the very top and get completely destroyed. It's like clockwork. And these markets absolutely love to feed off emotions. The emotional roller coaster we're all on. Think about what just happened. Markets were absolutely cooking to the upside. Everyone was expecting things to go much higher. People were jumping in and buying everything impulsively. Then boom, Friday's crash hits like a freight train. Suddenly, all hope is wiped out. Sentiment is in the absolute dumps. Everyone's saying, all right, that's it. I'm done. I give up. This has to be the top. Things are about to get way worse. Sound familiar? It's just like what happened at the beginning of the year when the tariff war started heating up again. The setup is perfect, everyone's wrong again. This is exactly why I'm so confident about what's coming. There are so many people on the sidelines right now, so many people thinking negative thoughts, and they're just not going to be ready for this next massive wave. And remember, this is going to be the largest wave we've seen. The altcoin explosion nobody sees coming. Here's what gets me really excited. Most of these projects, these altcoins like XRP, are still trading at significant highs. XRP is sitting at $2.40 plus, which is already pretty impressive. But if this next wave really is the largest one, we could see coins like XRP go 5 times higher from where they are right now. And that's saying something at these current price levels. Honestly, I could be wrong, and it might go even higher than that. But the point is, so many people just aren't bullish enough right now after witnessing that brutal crash we just saw. Deja vu, we've seen this movie before. This whole situation really takes me back to 2 major events, the FTX collapse and COVID. Remember what everyone was saying during those times? It's over. Crypto is dead. This is the end. And we all know exactly what happened after those events, don't we? Some of the biggest rallies in crypto history. Don't let history repeat. Stay ready. The bottom line is this. While everyone else is licking their wounds and assuming the worst, the smart money is quietly positioning for what could be the opportunity of a lifetime. History doesn't repeat, but it sure does rhyme. And right now, it's singing the same tune we've heard before. Every major breakout. That's a wrap for today's analysis. If this helped you see through the fear and understand what might be coming next, definitely smash that like button, hit subscribe, and turn those notifications